An interview with Caroline Barron, head of ETF Distribution EMEA at Franklin Templeton by ETFWorld.
Good morning. I'm Caroline Barron. I'm the head of ETF Distribution for EMEA at Franklin Templeton, and I'm delighted to be with you today.
What are the main drivers of growth for the ETF market in Europe and globally?
So I think there are, quite a few different factors that are going to keep pushing ETFs globally and in Europe. The dynamics between global and Europe are not necessarily similar, but if we focus on the European market to start with, ETFs have reached more than 20 years of existence, so they are getting known to many more investors. We've seen that the world of ETF has been growing quite significantly, and we've reached $1.4 trillion of assets in Europe. This is getting quite significant, even though there's a lot of room for growth because ETFs do represent about 10% of the mutual fund industry. So this is still a small area, but that keeps growing at a really fast rate. If we look at why, what are the reasons? So I think ETFs are becoming much more known to different investors. It's becoming more mainstream for both institutional investors and retail. But if you look at the dynamics of users, it's still pretty much the focus on institutional investors. So institutional investors still represent about 80% of the users of ETFs. And what we count in institutional investors are traditional pure institute companies, insurance companies, corporation, pension funds, but also the traditional wholesale market with discretionary teams. Private banking in general is using more ETFs. The pure retail side of the world is still getting to know ETFs, and there is a lot of progress here. Now, what we have been observing lately is that the retail uptake has been growing in Europe for ETFs. That started primarily through Germany, but we see the same dynamics coming across the different markets, Italy being also one of the markets where we see more retail uptake. So better understanding of ETFs, more client segments latching onto ETFs. And I think if you look at the world of ETF, it's been developing quite strongly. So more strategies have been coming to the market. Lately, it's been more on thematics, for example. We've seen more going on to fixed income. And I think the latest development has been on actively managed ETF, where you can see the hybrid between the traditional active world and then the ETF envelope being the kind of wrapper of delivery of choice for the market. So that is really spurring more innovation into that space. We started with fixed income, for example, and this is where Franklin Templeton has been focusing lately. So using the ETF wrapper, but bringing to the market what we've been doing for years, so actively managed fixed income. So innovation has been definitely a factor. And I'd say that, the cake is still a small cake and it will keep growing. We've seen more ETF providers coming into the market. So more providers means that the cake is going to enlarge on the ETF side, meaning that the assets will keep growing. So there's a lot of different factors really pushing the ETF world. But if we focus on Europe, it's one way, it's definitely up.
How do you differentiate your ETF offering from other providers in terms of quality, performance, and cost?
So I think, in the market, it's true that you start having many different providers. But as I was saying in the first question, we feel that this is a world that will keep growing. So we welcome new providers because it means more innovation and it means more products coming to the market. On our side, we used our heritage. So Franklin Templeton has been in existence for more than 75 years. It's been known to the market as an active house, and therefore we wanted to use that heritage and bring that into ETFs. So we've been focusing primarily on emerging markets. This is where we have quite a few different ETFs, and we brought the most cost-efficient range on emerging market countries, for example. We have issued Korea at 9 basis points. We have issued India, China, Taiwan, for example, at 19 basis points. And emerging market is what we are known for. Another area where we've been quite strong has been fixed income. So again, this is where we have quite a few different strategies that we've been bringing to the market. And here, this time, we didn't look at the traditional passive. We've looked at bringing the active mindset. So we have been bringing the first few products on the actively managed fixed income space using the ETF vehicle. We, for example, have the widest range of green bond ETFs actively managed, and that's leveraging the experience and the expertise of our fixed income team in Europe. We've been bringing, more things around euro short maturity, so managing the liquidity side of the portfolio on the euro side, and we've been bringing also a strategy on the US IG space, so US corporations, for example, again, using the lens of sustainability. So half the range that we have holistically, so we have a range of 23 ETFs in Europe, half of it has got an Article 8 or an Article 9. So again, showing that we understand where the market is going. There is more appetite towards sustainability, but not everyone is at the same pace. So trying really to accompany the market with our own DNA. So emerging market, fixed income, and we are also a big US equity house. So thinking about that part, because traditionally US equities tends to be done through passive. So there's a lot of flows going into passive ETFs on the US equity space. Here we wanted to again push innovation and think about how can you go into these core areas using, for example, a Paris Alliance, so trying to push onto sustainability, align your assets for the carbon transition, or maybe look at multi-factor, so trying to think about having a long-term strategy, focusing on quality and value, for example, and trying to bring something that is fairly active in mindset, but that is going to be longer term in the portfolio. So trying to look at different areas where we have already knowledge, expertise, experience, and bring that through the ETF tool.
What are the benefits of using active ETFs as opposed to passive ones, and what are some of the challenges or misconceptions around them?
We probably have to define what active ETFs are about, because they are different interpretation of active. So, talking about the misconception or what we need to do as an industry, I think there's a need to understand what clients are buying when they buy an active ETFs. On our side, an active ETF means that it's purely discretionary. So it means that we will have a portfolio manager selecting the bonds on our side, because what we offer for now in Europe is fixed income on the active side through ETFs. So selecting and picking the bonds according to a specific process that they have. So it's really purely discretionary. Now the the active ETF world has been developing very strongly, especially this year. If you look at the US market, 20 to 30% of the flows this year have been going into actively managed ETFs. In Europe, we're talking about 6% of the flow. So it starts from a lower base, but it's definitely accelerating. ETFs, active ETFs in the US represent about 5% overall of the AUM that you can find on the overall ETFs. If you look at Europe, we are around 1 to 2%. This is an area that is growing tremendously. You see more providers entering the market. This is where we see investors asking for more, especially on the fixed income side, because the traditional indices available tended to be market cap weighted, meaning that you tend to put more debt onto the more indebted companies or the more indebted countries, and therefore there was room for innovation in that space. But active ETFs are not just a preserve of fixed income. There's more happening on the equity side as well, and we believe that this is an area that will keep growing quite strongly, and we see more providers coming into that space. But with that comes the challenge of making sure that investors understand what they're getting into, they understand the active lens, and they understand then what the ETF vehicle is doing in that space. So there's a lot of education that as a provider we need to keep doing, but this is a very exciting field and a very exciting area of development for the ETF market.
How do you approach ESG integration in your ETFs, and what are the key trends and opportunities in this area?
Sustainability is here to stay. This is definitely a topic that we think is going to keep growing. Now, the kind of adoption of sustainability varies depending on the investor you speak to, depending on the country you are in as well. We feel that on our side, this is something that will keep growing. 50% of our current range is encompassing sustainability in some shape or form. Now, we understand that the wishes or the needs of investors will vary, so we have to be listening to that and accompany that the best we can. But there's definitely a trend to make sure that the portfolios are going towards a certain trajectory of decarbonization. Some investors are more at the first step and looking more at exclusion. One thing for sure is that we do believe that sustainability is here to stay. We do see investors also in other parts of the world really focused on that topic, even though where they are, it's not really a topic for now, but they are really focusing on what the regulation is bringing, especially in Europe, which has been at the forefront of sustainability and is really driving the push around this topic. So we do feel that this is here to continue. On our side, on the ETF side, it has different applications. If we look at the actively managed fixed income ETFs, we have a team that is going to select the different bonds according to certain criteria that they've been setting up and making sure, for example, if we look at the green bond area, which is fairly new in the market, there is a certain understanding that you have to really understand whether that bond is really doing what it says on the tin, and this is where the active lens could be very useful. You may have a bond that is not labeled as green, for example, but the company is actually focusing on decarbonization, on really driving projects that are going to be good down the line for the planet. And we need to find a way to select and include those in the portfolio. And this is why having an active lens could be quite useful for investors. On the flip side, if we look at the equity portion of our range on the Paris Aligned, for example, these benchmarks are coming from the EU. So again, it was focusing the movement on sustainability that the EU, the European Union, was really pushing and trying to make sure that investors can use the core assets that they have in their portfolio and push that onto the decarbonization path. It takes a little bit of education because, again, some investors are still very much focused on performance, and some need to have help understanding that you can still have performance if you include sustainability. So we do a lot of sort of education and looking at how you can organize the portfolios to make sure that you're following the trajectory. But one thing for sure is that the trend is still very strong. If you look at assets in Europe, as ETF assets have been very strong, the inflows have been very strong holistically for the ETF market, the proportion of ESG ETF flows have been lower, but in monetary terms, they are the same as last year, showing that, despite the market, uncertainty that we've seen this year, sustainability is here to stay. Investors are still allocating to those products, but, we need to find a way to accompany them more.
How do you leverage your global network and expertise to create innovative and tailored solutions for your clients?
It's a very good question. I think, first you have to be local. And I think this is one strong point for Franklin Templeton is that we've been in many of those markets for a very long time. And so we got to know the local investors quite well. So understanding the local need is very important because if you look at the European markets, we tend to say, okay, ETFs are developing everywhere, but the needs tend to be slightly different from one country to the other. Even from one client segment to the other, the needs sometimes are not aligned. So it's very important that you understand the local nature of the investor and you're able to bring something that is going to be useful for them locally. That said, I think it's important also to have this global presence that we have at Franklin Templeton, because sometimes you see ideas that are working elsewhere and that could be leveraged also for the investors in Europe. So, for example, we've been looking at some of the strategies that we launched earlier on in the US, namely emerging market countries, for example, and we found that this was an angle that could also resonate with investors in Europe. So we brought the same concept into the European market. But sometimes, it's the reverse that happens, and we see our colleagues in the US looking at the work we're doing on sustainability and thinking, could that be applicable also to investors in the US? So there's a lot of cross-pollination between the different territories. We also have an ETF business in Asia, and the Asian clients tend to also to look at the UCITS strategies. So we talk a lot to see what is going to be resonating with clients in Asia. So there's a lot of exchange between our teams. And then broader than that, as we said, we are focusing also on active ETFs. We leverage enormously the network of different investment teams that we have at Franklin Templeton. So we've been working with a few teams on the fixed income side, for example, to think, can we leverage some of their experience and expertise and bring that into ETFs, where the vehicle can be resonating very well with some of the investors we speak to. And we do that across the board, whether you look at the US, Asia, or Europe in particular. So I think it's, the network is enormously important to first make sure that you understand locally the needs, that you're able to speak also to your peers to see what are the developments in their markets that could be also happening to your markets down the line. And also, we want also to make sure that we receive the word of the street. So we do spend time with investors to understand where is that going. So for example, we've been manufacturing specific products for specific investors. One of them is the emerging market debt with Catholic principles that we've been launching. So that was based on the demand of one client in particular, one investor in particular. So we are also listening to what the street is telling us, bringing strategies that are much more tailored, but are responding to specific needs. So it's a mix of using our internal nature, global network, but also understanding what investors are telling us.
How do you see the ETF market evolving in the next few years, and what are the main challenges and opportunities ahead?
So the opportunities are immense, if you ask me. I think, some time ago there was a fear that we had reached the maximum of the ETF market. We just think as a company, this is just the beginning. If you look at first the number of new entrants, how many investors use ETF, it's really growing day by day. And as we said, in Europe, we are yet to capture the more retail side of the market. So we feel that there's an immense opportunity. As we said earlier on, the fact that the ETF vehicle is also going from passive, smart beta, now into active management means that the world is opening up to a vast range of different opportunities that could be captured through the ETF vehicle. Investors are more interested into ETF because it's lower cost, because there is transparency, this kind of flexibility, ability to go into the market, buy, sell whenever they want without, having to do a lot of admin work is definitely something that we see being appreciated. And therefore, for us, this is why we ventured into that market. We are celebrating the 6-year anniversary for ETF business in Europe. There's an enormous opportunity. So it's much more understanding now, what do you stand for as a company? What can you bring as value add to your investors, and how investors can receive the message, understanding who you are and what strategies are you bringing to the market. So it's definitely all about opportunities. Challenges do not really exist bar the kind of educational challenge. So again, how you and me understand ETFs. Do we get offered ETFs when we manage our portfolios? Do we get access to these tools when we want to go onto platform, for example? So making ETFs more accessible and making sure that investors better understand what ETFs stand for.
Thank you, Caroline Barron, Head of ETF Distribution EMEA at Franklin Templeton, for the interview with ETFWorld.